Hello, everyone. Um, we're here with Professor Arnoud Boot. He is a professor at the University of Amsterdam, and he served as an advisor to the Dutch government, among many other things. So, Professor, tell us, what's the big idea that you've been thinking about?
Okay, first, thank you for having this interview. Um, if you think about a big idea, you have to look at the financial sector, where you have banks that we know for a long time, and we have all these innovations coming up, what we call fintech, big tech. Big tech, think about the Amazons of this world and the Apples of this world, that sooner or later are going to invade this banking space. And what will that do to this environment of banking that we got used to?
And if you could just tell us, why do you think that big tech is better positioned than traditional finance to actually capture the customer?
Yeah, if you think about a traditional bank, and maybe that still fully applies to India. I don't know enough about India, but you think about a bank with branch offices that does a lot of cross-selling. It knows its customers, so it is basically a point of contact with the customer, offers various products. But what we see in the banking system, particularly in the Nordic European countries, including the Netherlands, you see a full digitalization of banks. So in the Netherlands, we had 5,000 branch offices of the different banks, and they're all gone. So you can no longer find a bank, basically. The only way to have contact with your bank is what you're used to from your smartphone, that you have apps. So the app gives you contact to the bank.
So the digitization of the interface has led to big tech being better positioned to be at that point to be the touch point, and that enables them to do better.
That's what's going to happen. So strictly speaking, the app, the banking app, is still on your phone. So formally, you have your relationship now via the app with your bank. But that type of relationship is a very different one from the past. You may only look at the app in a critical way when it doesn't function. Otherwise, you have no idea which bank you have. And that's basically what's happening in the Netherlands. So the relationship in the Nordic countries. So the relationship with the bank has weakened. But once you think about the app, big tech can offer financial products as well. So you see Apple already offering, together with Goldman Sachs, by the way, but they are offering a savings account for all their iPad and iPhone users. Apple also has a payment system linked to the banking payment system, Apple Pay. So who are we dealing with now? Are we dealing with a bank, or are we dealing with big tech being Apple? And increasingly, it is big tech. And what does it mean? It means that ultimately, the real risk for banks is that we are no longer dealing with the bank, but we are dealing with the platform, for example, Amazon, like we are buying something on the Amazon platform. And the Amazon platform, if we buy something, thinks, oh, this person maybe also needs some insurance or also needs a loan. So it's the platform basically that gives us then the services and interjects itself between the bank and the customer. So we no longer have a relationship with the bank, but we are dealing with the Amazon platform. And that's the ultimate threat for banks, because then they have basically lost their special relationship to whatever client they have.
And as a result of this loss of relationship, do you think it also affects their inability to lend to other sectors? Because I know this in India, that customer deposits are the basis on which you can do other types of loans, right? You can lend to a small business, for example. So do you see that losing that customer touch point also has threats to other non-customer segments?
Absolutely, absolutely. But this is still a customer segment, because the traditional corporation...
non-retail segments.
Non-retail, right. Yeah, non-retail. Right. So that's what you see. You see that specialized players via the Amazon, in this case, let's use as if the Amazon platform is already fully functional in financial dimensions, which it is not, because banks still have a very dominant position. But you see that once we get used to dealing with these platforms of the big tech, specialized players that offer one product, so no longer banks, deposits, and loans, and having some type of synergy between those, that you can use this information, you see that specialized players have better access to the audience compared to the past via this platform. So in the past, banks, they combined cross-selling. They were the interface with customers. If you were a specialized player, you had a disadvantage because how do you reach the customer? But if Amazon platform, as an example, becomes the dominant interface, then a specialized player goes via the platform and can better compete with the bank and has an advantage relative to the bank that it didn't have before.
So the threat to the conventional banking ecosystem also reveals an opportunity for multiple new models of finance or multiple new players trying out different things. So you seem to be positioning it as an opportunity for the overall financial sector, but not necessarily at the cost of the banks for sure. But you're also seeing this as an opportunity.
It for sure is. It for sure is. Huh? There are all kinds of examples where banking via fintech, big tech type of operation has become more inclusive. You can reach many people via the platforms of, say, the Amazon. The information about different people that banks in the past had with their own customers, but not with the poorer customers that were at a bigger distance, that information problem is partially resolved because the information that the big techs have based on this buying and selling behavior of people is enormous. And that information collection of the big techs is, on the one hand, a threat to banks, their existing customers, because now somebody else knows their customers as well. This information wasn't there before, and now big techs have that information, so they compete with the banks. But these platforms have access to all kinds of other customers as well that were previously not served by banks. So it becomes more inclusive banking. So that's the positive. The negative is for banks that they may lose their unique relationship. And if that had benefit for the customers, because it also had disadvantages, they were hooked to the bank, which is not necessarily good to be hooked to the bank. But the special relationship has also advantages, that the bank knows them well, combines things for the customers. That is at risk.
Apart from big tech, what else do you see as a threat to banks? We were just talking about crypto. So do you see crypto and the rise of maybe CBDCs? Do you see them also affecting banking in a large way?
Yeah, this is a very good question, because basically your question is the financial system as we know it today, where money, the cash, comes from the central bank. We are used to deal with our banks and the central bank. Is that going to be the universe of the future? The big tech, fintech type solution where we just talked about already indicates it will become more diverse. And what's happening to the fundamentals? Is the government, being the central bank, still going to be the provider of this unique interface for payments? Or do we get a new type of coin? Huh? Facebook had its own initiative years ago.
I believe Libra coin or something like that.
Yeah, it was Libra.
Libra. Yeah.
And in the new revision, it was called DM. But it was not just Facebook by itself. It was Facebook together with all types of parties, including some of the credit card agencies that were behind it. If that would have taken off, and it was linked in stability, so not like Bitcoin, like going like this. It was linked to a basket of existing currencies, so it was much more stable. If that had taken off, if central banks had not responded and regulators had not responded and had taken off, no, we would have been dealing with the Libra and the traditional currency that we are used to, this traditional medium of exchange, may have lost market share. And then the question was, who is behind this new type of currency, this Libra or DM in the new naming? Private parties, no control anymore by the government or central banks. So it would have been a very new financial system. But this threat, if you call it a threat, this type of new world which can disassociate itself from the traditional central bank, commercial bank dominance in the financial system, it might be the future. It may change. So we don't know. We are in the middle of these developments. So anybody who says Bitcoin, cryptos, that cannot be the future, we don't know. We are in the middle of developments. And central banks, and actually also banks, let's not discard banks. everything I've said. Banks are investing heavily in modern technology as well. Yeah, also trying to create their own platforms in other countries. So they may become big tech in a sense by themselves. Yeah, so let's not go to absolute conclusions. Um, the this new world, it might be, it might take off, and it may offer benefits. But the question is, in this new world, are we willing to accept this decentralized type of finance, which is suggested by Bitcoin and other cryptos? Are we willing to accept that, even if we find stabilizing mechanisms in the future? Are we willing to accept that? Or are governments, and maybe also the people, requiring that something as important as medium of exchange, currency, is by definition a public government activity? And we are moving in the latter direction, and that would lead to the initiative that we already see, central bank digital currency, which in a sense is the crypto equivalent. It's not necessarily in crypto, but it is the very digital equivalent of a functioning Libra, what we talked about. And you can all hold directly this central bank digital currency with the central bank, and you can make payments with it. What disadvantage would that have relative to a Libra that would have become successful? We don't know, because in that case, we have a digital equivalent offered by the most safe institution in the world, being the central bank. And that development we are going to see as well.
So, do you see the rise of the CBDC as a response to the decentralizing nature of crypto, which would take away power, right? Because the ability to issue currency is the power that a state has, and crypto, or at least the decentralized kinds like Bitcoin, and the extreme libertarian urge towards decentralization. Do you see CBDCs as a reaction, where the state is trying to react to the new technology and say, no, I want to be a part of this and I want to control it? Do you see this as a conversation just on finance, or do you see it as a major response in terms of state power?
Oh, all what we are talking about in terms of cryptos and central bank digital currency and the regular medium of exchange that we know today is about power. It's power of governments, the people in general, relative to the private sector. So it's all about power. And therefore, it's all part of the political process in the end. How this is going to work out is all power. And we see that the initiatives, the speed up of investigations by central banks on introducing and investigating central bank digital currency, CBDC, has had triggers. And one of the triggers was this Libra. This threat suddenly made central banks aware that even if they thought that central bank digital currency may not have added value, they should think about it, because they may have to balance this private initiative, and they cannot just kill the private initiatives without having a very similar type of public substitute.
And in this regard, are you an optimist, or are you more conservative? Say, are you an optimist that all of this new technology and all of this is going to change the world, and we should look forward to the chaos that it brings about? Or are you more of a let's leave things as they are?
No, I always try to be an optimist. So let's look at it from the glass half full and see what's required to have these developments, which indeed create uncertainty, work out well. Which doesn't mean that we can just wait and sit back, because think about the big techs that we talked about. And they already have a very dominant position. The European Union has been a particular, Brussels European Union has been particularly going after the big tech, because the big tech can misuse its market power, abuse its market power. And if they would become big in finance as well, because that's a natural complement to their existing activities potentially, we may be running behind. And once they are powerful, everything that has become powerful will have lobbying power, will get former politicians on board that lobby on their behalf, and we may be not able to put the right controls in place. So if it comes to this role of big tech in finance, it is crucial that we make sure that the big techs do not become basically as powerful as banks have become in many countries, particularly European countries, where they are too big to fail, where they have enormous power over the political process. So we are afraid of the banks, too powerful, and so we have to control that. And I think we need to modernize the system to be less dependent on banks, and this development of big tech, fintech will help. But if the fintech, big tech, particularly the big tech, becomes as dominant as the banks were, we have replaced one dominant, difficult to control player with another. So we have to think about regulation, how to monitor them without killing these new initiatives. And that's the challenge, how to regulate something without killing it.
Thank you, Professor.
Thank you very
Thank you
much.
for your time.